It's hard to breathe, but that's alright. Hush.
Hey, what's going on, guys? Welcome back to a new video. Now, we've spoken about supply and demand zones, and I'm actually going to dig deep into how do we actually find these supply and demand zones in terms of, if I look at a price chart, where are you going to spot those supply and demand zones? What are the first things to do, right? So when it comes to supply and demand quickly, there are different types of what creates a supply and demand zone, like not creates a supply and demand zone, but what is a valid supply and demand zone. So for example, the first one is, well, in my eyes, order blocks. Order blocks are pretty much just the exact same thing as supply and demand zones. All they've done is pretty much reduce it to the last candle within that supply and demand zone range, right? I'll jump into supply and demand zone range in a different video, probably the one after this. But I don't really trade supply and demand zone ranges. I focus on the equilibrium, stuff like that. I focus on order blocks specifically, as I feel like it's more precision, right? However, once I see supply and demand zones, certain range in the market, it's just good to understand supply and demand zone ranges. So I'll jump into that in a different video. Also, you may have heard me mention pivot supply and demand zone. And when I say pivot supply and demand zone, all I'm pretty much just mean is order blocks. Now you can refine it to a couple of candles, but for example, if you've got an order block on the 1 hour time frame, if you go to the 15-minute time frame, there'll be at least 4 different candles there within that hourly order block, right? So that would be a pivot order block on the lower time frames, right? But one candle on a high time frame. But I'll jump into that later on. Okay, so there's 2 different types of order blocks. There's bearish order block and bullish order block. And first, before I jump into them, we need to explain what are order blocks, as if you're wondering, right? So order blocks is a specific price range or a candle where institutions will be buying or selling against the retail trend dump money. So institutions leave order blocks for themselves to trade at a later stage, and they reverse the price to a previous order, and then driving the price hard in the direction of the trend, right? The real institutional trend. So, as we've spoken about in market structure, when price is creating higher highs and higher lows, when price creates a higher low, it's usually tapping into a demand zone, and those demand zones are being respected, right? And when we say demand zones, we mean essentially this order block that we're going to dissect into now, okay? And that's how we pretty much find it, okay? So, the way I see it, when we see these order blocks, is if we look at in terms of calculations and maths, right? So the way I see it is institutions are pumping money into the market, but the way they pump in money into the market, they're doing 3 stages or 4 stages, right? They don't put, say for example, they have $100 million to put into the market. They won't put in $100 million in one trade. They might do, but they'll split that chunk up that they're putting into the trade into different stages. So for example, if we do 4 stages, or let's say 3 stages, so put 25 million on each one, but on the third one it'll be 50 million. So you've got 25 million, 25 million, and 50 million, right? So there's 3 different stages, and what I do is when you see that this candle be created and this sharp sell-off, that's number 1. Then what they'll do is they'll pump money back into the market to push price back up. That'll be number 2, and then the last stage is number 3, in which we would obviously look to trade with them, because obviously when order blocks, like I've spoken about, it's for themselves to trade at a later stage. So when we see an order block, price will continue to do something, and then later on down the line, a different day, even a different week or whatever time frame you're on, it will come back to it later on, right, and tap into this supply zone, right, and just usually sell off, right? And that's the 3 different stages. And what I mean when it comes to order blocks, they do sometimes do it in like 4 or 5 stages. We don't know how many stages they do it in. They could do it in 2 stages. We don't know. But for example, when they do it in 3 stages, that's usually price tapping into supply zone. If they do it in 2 stages, then that's pretty much price breaking above and then becoming a breakup block, in which we will jump onto later on down the line. Okay, so yeah, it's very simple really. Order blocks is just where they're pumping the money into the market. It's where the institutions are buying or selling, and then they'll push the trade in the desired direction, and usually look to mitigate that, and which price will then pull back into it, and that's when we would look to sell, because obviously we wouldn't want to sell here because we have no power over the market. We can't just sell there and push price down. That's not how it works, because we're not the big players in this game. We're tiny. So what we want to do is we want to catch the pullback. When prices pull back, we want to obviously sell, right? And usually when you see this, right, all this will be is a sort of supply zone. So for example, if price is creating a high, a low, and then we've got a new lower high and a lower low, right? Say for example, let me just redraw that on. So okay, I suppose that won't really work, but yeah, that'll do. Okay, so say for example, price got a high, got a low, got a lower high, got a lower low, got a lower high, got a lower low, right? As we are still in this range, we want to mitigate this range here, right? Once price has, left this range, this order would become invalid, and we look to target a new supply zone. So pretty much what we're doing in this case is, pretty much what I'm saying is, when we see like an order block, it's usually within the market structure. This is why it's important to know the market structure, because when we look at our, in terms of finding our supply and demand zones or order blocks, we want to be looking on the high time frames, so within the market structure, because usually when there's a high time frame point of interest, we only need to wait for price to pull back to that point of interest. Once it pulls back to that point of interest, that's a whole different story. Then we jump down to the 1 minute time frame, look for a Wyckoff phase, look for wick rejections, look for bearish confirmation, bullish confirmation. It's completely up to how you trade, but I'll show you all different approaches to finding entries, right? But usually when you find the highest probability of the setups is in the swing points in price, so within the swing structures. So if there's we focus on the most extreme, right? So pretty much if there's an order block up here, right, what we're expecting to is price to tap into that, right? Another order block there, price to tap into that, right? We're not focused on an order block here because it doesn't make sense really, right? Because you look at it logically. You probably could get a short-term scalp before pushing back up, but we want to focus on the most extreme points. It's completely up to you. I used to focus on the most recent, but ever since I started focusing on the most extreme points, that's when it became a lot more profitable. However, you can focus on the most recents and look for those short-term scalps, but just be aware of the substructure. Okay. And also as well, say for example this was a previous demand zone and which got violated, this would then become a supply zone, and that would be called the breaker. So it would be the I think it's breaker demand to supply, so BDTS is what we call it. And then obviously if it's the other way, it'd be BSTD, right? So pretty much it's an order block, right, that's been violated, so broken below. Price will then retrace to it, create another lower high, in which we can look to sell from, as long as there's an imbalance in price. But we'll jump into that later on down the line. But pretty much what I'm saying is, the moral of the story is that within order blocks we want to focus on the most extreme points, or in terms of supply and demand in general, because that's the most high probability setups. Because what we can do is, if we take a trade here, have a stops above there, whatever, right, or if we get on a small time frame and have a stops above there, we can pretty much just ride the wave, right? But if we're looking to trade within here, we got to worry that price is still could even pull back and create like a sort of equal high, right? In which we'd look at that liquidity later on down the line. But you get what I'm saying, it could create a double top in terms of retail world of trading, right? So we got to just factor that in. But if we focus on the most extreme and have our stops above there, we're very safe, right? Like I said, this is the complete basics of order blocks. I'm not going to go too much in depth about it. I'm going to show you this simple way of like trading it. So most extreme points, stops above the previous lower high, right? But obviously as we get more down the course, there'll be more advanced techniques, where we jump down for confirmation entry, different types of entries, and looking for those scalps on the 1 minute time frame as well. So there's a lot more information to come, so don't worry. But yeah, when it comes to looking at market structure, to make sure you try and find those high time frame points of interests. Okay. What I will do is as well, if we go on to the charts now. So again, two types of orders. There's a bullish order block and a bearish order block. Okay. So if we jump onto the charts here, you'll see them all the time. So as you can see, price is moving to the upside. Okay. So now price moving to the upside, we're going to mark up this, pretty much the substructure, right? So this is a complex pullback, which is just mitigating an order block over here, right? But this is the complex pullback. However, price came back up, created an order block and broken structure. Not only did it break structure within the complex pullback, but it also took out a previous lower high, higher high, and created a new higher high. So this would be a new higher high, and what we're expecting is a price to create a new higher low in order for price to continue higher, right? We can't consider this a bearish market until at least this low has been taken out, and which it did eventually get taken out here, right? Or down here as well, which we'll jump onto that later and look for supply and selling opportunities. But if we just look back on this, you can see price broken structure, which to us is an appealing level, and it also created this imbalance. Now we'll jump on to imbalances in a separate video and breaker structures in a separate video, but this here makes a valid order block essentially, right? Now usually what we do is I'll talk about order block refinements as well. There's so much stuff to go through, but this here is an order block, right? This is the 4 hour order block because this is the last down candle before the up move, right? If we're looking at a different order block, right? So obviously this here is the last down candle before the up move, so that's a bullish order block. So if we look at a bearish order block, we're looking at the last up candle before the down move. Bullish order block, last down candle before the up move. Last down candle before the up move. Bearish order block, last up candle before the down move. Okay. So this here is the order block, or also demand zone, in which we're looking to mitigate. Because as you can see, you may be thinking, well, there's an order block, right? There's an imbalance. So why would that not be a valid order block? Why would I target this one? Well, yes, I get that is the most extreme, but if you look here, price has already tapped into this region, right? So it's already took the liquidity and run. Okay, it may come back down and take it at a later date, in which it did, but a broken structure here, right, which we consider bearish market. But as you can see, pretty much what I'm saying is this is the sort of order block that's most valid compared to these, because there's not been any price that's tapped into it. You know, there's a big imbalance. You've seen a shift in momentum. When we, you know, seen this move here, we did get a sort of reaction, but it wasn't as big as this move here, right? This is a huge move, right? So this tells us a huge shift in momentum. Price was ranging, accumulating orders, breakout to the upside. Obviously there's more demand for euro yen, and obviously prices came back down, tapped into the equilibrium very nicely. Again, we'll go over equilibrium. So if we were going to mark up this range, right, this is what I'll show you a quick example of range supply demands. So this here is a range, right? And if we focus on the equilibrium, so that would be there, but it'd be around there, right? And pretty much when you focus on the equilibrium, price will then tap into the equilibrium of that range and then run up. But that's a different story for a different video. But yeah, as you can see, price tapped into this order block, the last down card before the move, and seen a huge reaction. So if you want to take a risk entry, that would just be set in limit order. Again, we'll go into different types of entries, confirmation versus risk entry, which one is better. But as you can see, price had a nice reaction straight away, and that's what you should be seeing. Okay, because the longer the time spent within our zone, the weaker it become, and usually could turn into a breaker. Okay, because if this broken structure and took out this low and all these lows, then it should tap into that region in which that was where the orders are at, and then sell off. Alright, but that's something for a different video. But yeah, so pretty much price then created a new high. So all these highs here, you know, that's pretty much a high. Then we sort of got this range here. So this here looks like a range, obviously, because it's just moving sideways. It's a sideways correction. And if there is more demand, price will break to the upside. If there's more supply, price will break to the downside. As you can see, price broken to the downside, created an order block here. So we could actually look to take a trade off this, you know, supply zone, in which, well, order block, in which price tapped into it quite nicely and sold off. Right. Another reason why we consider this bearish market, not only because there's a broken to the downside and created supply, there's more supply, but also took out previous swing low structures. Right, so a higher low. So this here is a higher high, higher low, higher high, higher low. And when we go back to market structure, remember that this is all just substructure. This is all just noise, because to a lot of people they would think that this is a bearish market, but because we're on a higher time frame, we know that this is not bearish market. This is overall bullish, right? But as price broken structure to the downside, took out this low, and also created, you know, broken to the downside in terms of, and it's ranging, did a break to the downside, that's creating more supply, right? Did it break to the upside, it's creating more demand, right? As you can see, price came back down, broken structure, again, complex pullback, so a lot of people would consider this a bullish market, right? But as you can see, it's just all a complex pullback into the supply zone, which looks like a compression into our supply zone. Again, there's many different types of, you know, chart patterns. For example, when someone teaches you about candlesticks, they go all about these different types of candlestick patterns. So you got Marubozu, engulfing, dojis, right? They all go into different types of candles. So it's like when we trade order blocks and supply and demand, there's so many different ways to approach it. This looks here like a compression to a supply zone, and there'll be a cheat sheet for that as well, which would be quite cool. As you can see, price tapped into the open of it and sold off, but as price came back up, it tapped into more of the equilibrium side, and sort of went into more of premium zone, right? Price then sold off. And this point now, we got these structural points, right? So high, low, high, low, high, and low. What we're going to look at here is order block. Okay, so now we're looking at supply zones, And I'm going to show you a quick tip here as well. Like we've spoken about breaker blocks, it's the range that got violated and which we're looking to mitigate later on. As you can see, price came back down into it, violated this, demand zone, right? Previous demand zone, which obviously is supply. Now we switch sides, right? And it's gone, okay, less demand for it, there's more supply, blah blah, right? Bearish, sellers are in control. So now we've got this supplies, demand zone which has been violated. It's also now created a 4-hour order block, right? So if we wanted to, we could go ahead and mark up that order block, right, as a supply zone and look to sell from there, right? Because again, this is the most recent before the breaker structure. I know I say focus on the most extreme, but we'll jump on to different techniques later on. But this here was a general nice point of interest because I understand breakers, and which you will do as well later on down the course. So that's pretty much a demand zone that got violated, which left an order block, right? And also imbalances, right? This massive shift in momentum. This again, reason why I chose this rather than this order block here is because this is very choppy. This up here has already been tapped into by this wick here. There is an imbalance here which price could tap into later on, but when you compare and measure the moves, this is where the real selling happened, because there's 2 candles here and there's only 1 candle there. So if we got onto the 15-minute, right, the 15 minutes where we see our ranges, and we can start to refine them as well. I'll jump onto refinement in a separate video, but I'll jump onto that in this one as well, just a quick brief. But as you can see, there's much more range in movement here. So what you could do is go ahead and mark it up and look for an equilibrium, but we're not focusing on range, create supply and demand zones. But what we can do here as well, as you can see, this pink zone is the overall 4-hour order block. But if you wanted to go and refine it to this one, the reason why I chose this one is because obviously, well, not because obviously, but the reason why I chose this 15-minute order block is simply because this is the most recent before the breaker structure, right? So this is the most recent up candle before the down move that broke in the 4-hourly sort of order block, right? As you can see, order block, it's another order block there as well before this huge shift in momentum. So I want to be targeting, I want to be quite aggressive within the move. So what we're going to look for now, if we just go back to the 4-hour time frame, is we're going to just literally wait for price to target back into it. Because remember, we were previously looking for buys, but as we broke in structure, we're looking for sales now, right? So once price taps back into this, we can either set a risk entry or drop down to the 1-minute time frame, look for an entry. So let's just see how price reacts when it comes back into it. Another thing to note as well, it's massively sold off, right? There you go, price is tapped into it. So let's see what happens, right? So price is now sold off, right? Will it tap into it again? No. Okay. So as you can see, it tapped into the overall 4-hour order block anyways. So we would have been fine without any refinement. That's absolutely cool, right? That's fine. But because we wanted a bit more precision, we wanted to try and get that, lower time for entry because there's a range there, right? That we just spoken about. As you can see, price tapped into that perfectly as well. Okay, but it would have been fine taking a risk entry off the 4-hour order block because you would have been tagged in there with spread anyways. But that there would have been a fantastic trade, and in terms of scaling opportunities, you could have scaled in around here. But if we just replay this here, let's do a few more candles. Can I go back this far for a 1-minute time frame? I want to just see and show you the scaling opportunity that we could have got. So if we just look at this here, right? All that we're doing is when we wait for price to tap into a point of interest, right? If you want to get the best of the best entries with the more of a tighter reward, stop loss and bigger reward, this is something to look for. Like I said, we'll jump onto that later on down the line. But if you're on a 1-minute time frame and you're trading these 1-minute highs, as you can see, it's created all the triple top. That is pure liquidity. So what we're expecting from there is a liquidity sweep, right? So we'll jump onto the differences between breaker structures and liquidity sweep again later on down the line. But when we look at liquidity sweeps, all it's doing is just taking out previous liquidity, in which it tapped into the overall order block area, right? Also, another thing to note as well, this looks like a nice distribution phase. So again, Wyckoff, again, we'll jump into that in a different video. But as you can see, price is just ranging, right? So what it's doing here is creating this range, but it's also broken to the upside. So this looks like an up thrust, right, or after distribution, which essentially just looks like a liquidity sweep. Then what happens is price comes back down. So again, it's ranging. So we want to look at the last candle before the down move. This last candle is before the down move, that broken structure. Because if you look at this, right, this is a high, this is a swing point, this is a swing point. So if we look at breaker structure to the downside, this is the move that took it out. And this is the move with the biggest, bearish sort of momentum because if we look at this here, this is all seems like balanced pricing. So price is pretty fair, everyone's getting a fair chance of liquidity. But if we just look at this one here, right, we can go ahead and just draw that out. And what we can then do is, because this is the confirmation entry, right, this is confirming the downwards move. So now we've confirmed the downwards move, we took out loads of structural lows, swing points. We're going to set a risk entry on either the open. The open's fine on this one, and our stops are just going to be above there, right? So 2.2 pips, so we can have a 2 pip stop there, right? Once factoring in spreads, 2 pip stop is enough, right? If you want to be a bit more confident and wait for bearish confirmation to the downside, what you can do is just, if we move this out of the way, is at this point we can just wait for any bearish confirmation. So we found a distribution phase, we found a breaker structure, we found the order block supply zone, so risk entry is fine, right? But if we want to take that extra step, we only want to look for the bearish move. So as you can see, we've got a bearish move here. Have your stops matching the wick. Then as you can see, we could target wherever you want to target, right? But if we just look down, well, we'll zoom out in a minute. But as you can see, that would have been a nice, at this structural lows, 14 to 1 within a space of, so how long was this? Right, so in the space of 1 hour and 10 minutes, you've made back 14.5%, okay? But if we just take a trade based off the open, we've got stops above there, right? And let's say if we just zoom back out to the 4 hour. So make sure you understand this, guys. Price is tapped into an order block, right? We didn't care about going to the 1 minute time frame until price is tapped into the order block. Once price is in the order block or the supply and demand zone, that's when we go down to the 1 minute time frame, right? And then we wait for price to play out. Once price is played out, you can look for a distribution phase. In this case, it was a nice distribution phase because obviously we've got equal highs and then a big sweep to the upside. I don't really mark up my Wyckoff phases these days. I mean, we've got obviously all sorts of, different notes that we can put on. But for me, I just look at the equal high, and then like a liquidity sweep in the middle or at the end. Once the liquidity sweeps happened and we close back in within this range, that's when obviously we'll look to expect the breaker structure and look to target that order block. But if we just mark all of this up, right, this just looks like one big supply zone, right, in terms of ranges. Because if we're trading ranges, this would be a supply zone range. But if you want to mark that up, it's absolutely fine. So you got another confirmation that this is a big supply zone, and also this is the last candle, but that broken out the supply zone, broken structure as well. And as you can see, price tapped into that now very nicely. So I think personally order blocks are more valid. But if you understand supply and demand zone ranges, you'll usually notice that anyway within the order block, right? Because price is fractal, so when you're on a 1 hour time frame, you see the 1 hour order block. If you go down to the 1 minute, you're going to see just a huge range. That's something to understand. But again, if we go back to patterns, you'll see this often from time to time. This whole move here looks like one big compression into the supply zone. Again, there's different types and patterns. This looks like a compression. Supply zone is very common, and it's very common for sort of compression to our demand zone as well. But if just understand that distribution, breaking structure, order block, mitigation. We took a risk entry on there, so a limit order. If we just go back to the 1 hour time frame, so we got a nice entry there, and we can look to target the higher time frame lows. Sorry, because remember, what you got to remember is if you're trading on the 1 minute time frame, you're scalping. That's absolutely fine. But we want to target areas on the high time frames because we targeted the 4 hour point of interest, right? So what we're going to do is target the 4 hour point of interest lows. Say for example, we target this order block here. That's a 46.55%. So if we just let price play out, as you can see, price tapped into it nicely. So we had multiple entries, right? We could have got, and I can guarantee as well, if I go down to the 1 minute time frame and look at this whole move, there's a lot of, I reckon you could get a lot of scaling opportunities there. So even just looking at this 4 hour time frame here, this here looks like an order block, broken structure below this lows, came back, mitigated it. So if you went on a 1 hour time frame, you could look at that a bit more clearer and actually see here that price tapped into that region very nicely. So you could look at this as a pivot point again, and as you can see, you could just take a nice sell position from there. But if you go down to the smaller time frames, you could actually see an order block within that. So you can go and study this. But that's pretty much it really. In terms of order blocks, there's not really much to it. It's just the last up candle, the last down candle, blah, blah, blah. But that there was a nice trade. It was a 46.55%, right? But if you even wanted to take it extreme and target the the swing lows, that's 115% trade, and they are possible. But obviously, we're going to get the pullback. You're going to have patience for this because we don't want to be up 50% and then price pull back to what 8%, 7%. There's just no point. I'd much rather take that 50% here than risk being price pulling back. So this is why it's important to understand psychology. Again, there's a psychology section at the end of the course as well. We want to just not be greedy, essentially, right? So if we wanted to hold the swing lows, that depends on your obviously tolerance, because if you're like patient enough to hold all of that, then fair play to you. But as you can see, what happened on a smaller time frame, right? We got a 2.2 pip entry, right? Stop loss, a 254 pip take profit, but it's 115%. So that's a crazy return. So that's like a 100k account, 1% risk. You get back 115%. That's just under 116,000 in a single. Oh, it took obviously a couple of days, but let's have a look how long it took. So within 2 weeks, you made 116,000 on a 100k account, risk on 1%. So if you trade FTMO and you take 1% risk, and you took that, this is achievable, guys, okay? And you've just seen it there. I haven't even seen this, right? I just let price play out. And you just look at it within structure, because structure comes down to everything. Once we take out previous structural swing lows, we're in a bearish market now. We ain't no longer looking for buys because we're in a bearish market. We'd only look for buys because we're moving up, in which we've shown you an example here. But when I see order blocks, that's essentially what I mean. It's just pretty much the last candles before the certain move. It's quite, I suppose you could say, self-explanatory. But yeah, I hope you get value in this one, guys. I will obviously go into, range, create supply and demand zones. That won't be as long as a video as this one. Just because that one, I don't really trade it, but I want to make sure that you're aware of it, because obviously it will lead into these breaker blocks, in which we can look to talk about later on down the course. But yeah, guys, thank you so much for watching. I appreciate every single one of you, and yeah, let me see you mark up the order blocks. Make sure you send screenshots into the Discord, into the community, and just let me see you, put in the work, because it's just nice to see, right, when someone appreciates your work, and they're putting your methods into applying your methods into real time, then it's just cool to see, right? So pop these in the Discord, let me see your charts, order blocks, and yeah, that's the best way to learn, I guess, because people can give you feedback on it then, and that's how you're going to grow, right? But yeah, as always, guys, I'll stop going on now, and I'll see you on the next video.